Hey, what's up, my friends? So in this week's market analysis, I'll be sharing with you the metal right now, this particular metal, which I find it to be very cheap at the moment, and something that I think is worth taking a look. Also, we'll look at a few products that I'm currently in the trade right now, and a few other trading opportunities that I'm looking around as well. So all this and more in this week's market analysis. I'll see you there. So the metal that I was actually talking about is none other than palladium, right? Palladium. Palladium. And it's in the same category as, gold, silver, platinum, palladium. They're all in the same category. They all belong to the metals group. And this week, what catch my attention is that palladium, it has broken out of a multi-year lows over here, right? This is the lows of, I would say, this is the lows of 2014, and he has actually closed below it. So it is a sign that, the bears are in control. And if you look at the price action over the last 6 weeks, price has actually closed lower as well. So something to take note of is that, it's currently trading at multi-year lows, bears are in control, and I would say the next key support that price would come in is probably here, over here, and lastly over here. So the key thing is that, how are you going to trade this particular product? And if you ask me, the 4-hour is an ideal place to look for trade location. You could look for a possibility that price would retrace back towards the 20-period moving average, thereby rendering you a shorting opportunity. Or likewise, price could do this. It could potentially consolidate for quite a while. Then your 20 will start to catch up a little bit. And after which you have a potential flag pattern that you can trade towards the downside as well. So Palladium, definitely something for you to be on your watch list. So keep a look at it. Another thing is sugar. So I think you recall, right? Sometime back ago, I was trading sugar. I said that, the weekly chart, we see that price is in a downtrend because we had lower highs, lower highs, lower highs. But I noticed that, the 50-period moving average also tends to, be breached by quite a bit because we have this false breakout here, here, and here as well. So the key thing was that I mentioned was on the daily chart was this, that the daily was in a range. And what really caught my attention was this, I would say, slight consolidation in front of support, right? Because you see this is support, a swing low, and we had this consolidation over here. And if you ask me, right, if that level was to be such a strong level, a level which is so highly in demand, right, price shouldn't be consolidating there for a sustained period of time. The fact that it is sustaining at that level, in that consolidation, is telling you that it's not very bullish because the bulls are unable to push price higher. So basically what I did was I took a short below the swing low, and stop loss was somewhere around here, around this high over here. So after which, price then went in my favor this week, and I'm still watching out how it would unfold. Because a very common scenario is that, you don't want to get your stop set to break even too early, because a very common typical scenario is that price retrace back higher, testing the previous support, turn resistance, and then it trades lower. And if you set your stops to break even, chances are you're going to get stopped out at this potential high over here. So again, just hold your horses, right? Leave your trade at its original, leave your stop loss at its original level, which is over here, Let the market show you what it wants to do before you trail your stops accordingly, right? Do not be too, I would say, too early in pushing your stops to break even, because a lot of the time, what you see is that price just touch your stops, touch your break even, and go back further in your favor, and you're going to feel pretty lousy after that. So, just a word of, just something to share with you. So another trade currently in is copper. So let's look at copper. Again, a very similar scenario. If you see it on the weekly chart, we have lower highs over here, here, and here. And you notice that the 50 EMA tends to, get breached by a few candles before it trades lower once more. So we breach for a few candles, then it trades lower. Breach of 50 EMA for a while, then it trades lower. And a similar scenario here as well. So very interesting pattern on this market. And the key thing is I want to highlight is again on the 4-hour chart. If you recall last week, I went short. I went short on this swing low over here, this breakout. So price was in my favor. Then it went against me, stopping me out. And I got short once more, another time, because price was at this key resistance level. And to me, it was a trading opportunity as well. The trend is still down, so I went short a second time. And I would say, unfortunate for me, right, it paid off on the second time because price is right now in my favor. But for those who are, not short, don't worry, right? To me, there is still trading opportunity if price retraces back towards the 20-period moving average. To me, it looks like a trading opportunity because you see the 20 and 50-period moving average. Well, in fact, the 20-period moving average, which is this red line over here, has been acting as dynamic resistance. So I would say that is a short opportunity for those who are actually not in this trade. For me personally, I'm still looking to scale in my trades, right? Add on to additional positions. So if the trading setup comes, I will look to scale in my trade. And another pair I'm looking at is the pound New Zealand, right? So, just look at this rocket move, right? It's a rocket launching, and I'm not in any of this move, right? I failed to get a entry on it, so I would say that is part and parcel of trading, right? You're not going to catch every single move in the market, and this is a move that I personally I've missed. And look at it historically, you see that pound New Zealand has been range bound for, I would say, quite a few years. And usually what happens is that, if price has been ranging for a long period of time, breakout is going to be very sustained, it's going to be powerful, and this is what we've seen here. Just look at the number of bullish closes it had over the last 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks. 9 weeks of higher close. And if you're a counter trend trader, I would say be careful because it has been trading 9 weeks higher in a row. How much higher can it go? It can go 10 weeks, 11 weeks, 20 weeks. I don't know. But the thing is, if you're going to be a counter trend trader, right, you would think initially here is, it has been up 1, 2, 3, 4, 5 weeks in a row. It can't go any higher. Then it went higher on the 6th week, higher on the 7th week, 8th week, 9th week. And if you're not having a stop loss in place, as a counter trend trader, you're going to get busted in this move. So always have a stop loss in place. Counter trend trading is not wrong, but if you're trading without a stop loss, that is wrong. So just something to share with you. And on this pair, right, here's where I'm looking to get long. On the 4-hour chart, again, you see the 20 and 50 period moving average is acting as dynamic support, and any retracement back towards this zone over here is a long opportunity. So it's something that I'm watching closely as well on the pound New Zealand dollar. And last but not least, let me share with you a trade that I got stopped out. So this is the chart of soybean, and if you recall soybean, I said that it had a series of lower highs over here, and this was a key support. And usually when this kind of pattern emerge in the markets, I say one of two things will usually happen. One is you get a real breakout, and number two is you get a false breakout. So in this scenario, it currently shows that it's actually a false breakout, and I got stopped out of my trade. So on the daily chart, where I got short was here. I went short when price traded below this swing low over here. Then I was in the money for a while, and after which the rest of the days price was retracing or consolidating against me, and finally this higher move came in and stopped me out of my trade over here. So it's a false breakout, and I have my stop loss in place. So actually it's not much of an issue. You get stopped out of your trades. Some trades make you money, but over the long run, if you have an edge in the markets, you will be profitable. So again, loss are part and parcel of the game. So don't be too upset if you encounter losses. As long as you are keeping your risk tight, 1% a trade is something that I encourage. Keeping about 1% a trade for each trade. The losses won't really devastate your account because your risk is kept to a minimal. So this is something to share with you as well. So that's all I have for you boys and girls this week, right? If you find it useful, you can always feel free to leave your comments below. And with that, I wish you good luck and good trading. I'll talk to you soon.